Hello everyone and welcome back to a Week in Markets video. We're taking a temporary pause in the portfolio birthday celebrations this week to get back to what we're good at, which is reviewing markets and economics. I'm delighted to be joined by Paul Durrans, Investment Director here on the investment management team, to discuss the US shutdown and the rolling bandwagon, which is Trump's friction with both Congress and with the House of Representatives. So Paul, let's start with yourself. Specific to the shutdown, what is a government shutdown?
Well, quite simply, the government stops working.
Parts of it.
Parts of it. So you've got 750,000 people on furlough now. So many of them not getting paid. So ultimately, all the operations, all the work that's been done comes to a standstill. So you think about all the data releases that comes through each week, we don't get those anymore.
So that's the important point. In the past, we've often thought about furloughs being it's people like park rangers, it's librarians, it's some parts of the teaching sector which are impacted. But this is actually the US statistics body which has effectively stopped gathering data. That's one of the reasons why we didn't get the non-farm payrolls print for September last week.
The non-farm payrolls is the main monthly employment report that the Federal Reserve, the US Central Bank, will really focus on to help guide their decision-making on interest rates.
So the shutdown's continuing, but we've been here before. In fact, we've been here before a couple of times in Trump's first term in office.
Yeah, absolutely. Last time it was, I think, depending on which statistic you use, it's around about 35 days, which was the longest on track record. So that was 2018 into 2019. So we have been here before. These events are often well flagged within the market, so it didn't really come as a surprise, and that's perhaps why we've seen market reaction to this. They've kind of just shrugged the shoulders and moved on and focused on the fundamentals.
Okay, yeah, so we're just a matter of days into this. We did have the impact of no non-farm payrolls print last week, and we know that there's been no US data of note at all, which comes from the statistics bodies this week. But the market impact from this is zero.
Yep.
Is that fair to say?
Absolutely. So if you can look at this through different ways, but predominantly we'd focus on the US government bond market and looking at what their yields are, and they've basically just stayed around the same. Very, very little volatility. Markets just expecting this to be resolved at some point and not to have any real detriment to economic activity. And I said, we have been here before.
So I'm sure there's a joke in there somewhere about government sector being laid off and markets doing well, but we'll focus in on the markets doing well part, which is we're continuing to see all-time highs in US indices. But that's possibly not a US story, is it? We shouldn't forget the fact that global stock markets this year, pretty much everywhere, have hit new highs. And it appears to be a global growth phenomenon, a nominal GDP argument, not really a US-centric story.
Absolutely. You know, US equities always get the headlines because it's the biggest stock market. But really, as global investors like we are at True Potential, we've seen excellent returns from Europe, Japan, China, broader emerging markets. Even the UK's been doing pretty well. Reaching new all-time highs. So it has been a global phenomenon, great for our portfolios, great for our clients, but really underpinning that has been lower interest rates, a more benign inflation outlook, improving economic activity, and then thinking about companies, earnings revisions have been trending more positively, which is really encouraging.
And of course, one of the bizarre consequences from the US shutdown is, of course, it probably almost guarantees an interest rate cut from the Federal Reserve at their next meeting, simply because they now have no visibility on the jobs data at all. And so we'll probably take a cautious preventative step by cutting rates. One country did mention there that probably deserves a bit more reflection in this forum is Japan, just given what's going on in the stock market there, really since the early days of August.
Yep, so going back to August, really Japan started to perform well once there was a trade agreement between Japan and the US. But then we've had a series of data points that's encouraged investors to allocate more to Japan, and you've seen strong returns. You've seen improving on the earnings front, But more recently this week, we've had the announcement of a new Prime Minister in Japan. I'm not going to pronounce her name because
it's difficult.
It's difficult. But her policies are very much aligned to previous regimes where they were very much focused on much more government spending, more easy monetary policy, so lower interest rates, trying to really fuel growth, very much focused on the domestic economy, and that's been great for her.
And it's an interesting juxtaposition because some of the communication from the new Prime Minister there is very similar to Liz Truss. The idea of liberalising the demand side, trying to boost real growth, whilst also hoping that interest rates go lower or are capped. Of course, that didn't work out very well for Liz Truss, but it appears to be working out incredibly well for investors in the Japanese stock market, such as our portfolios. And the currency hasn't weakened too much. So Japan does appear to have that fiscal space to actually stimulate the economy, whereas clearly the UK did not have that fiscal space given the inflation challenges we faced. Okay, Paul, thank you very much. So that's a bit of a zeitgeist into the impact of the US shutdown, which so far is actually negligible. But if we're still here with you by Christmas, then I think there will be some wider economic impacts across the US economy. It's still a great story that we can share with you on market performance, not just equities, but gold as well. Asset classes performing incredibly strongly and really capping what has been a great year so far. So that's all for this week. Please join us for next week's videos where we clearly won't be talking to you about US data because it's unlikely that even if the shutdown ends, the statistics bodies will have had enough time to regather all that data. But we will be focusing more on the UK next week, given we begin with the jobs data for the month of September. So please do like and subscribe on the YouTube channel, and we'll see you all next week. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.